Hey guys, welcome to today's daily advisory, and welcome to 2018's first major correction. For those new to cryptocurrency, this may come as a shock, but this is what a market without restrictions and stopgaps operates like. If a similar move were to happen in the stock market, they would send everyone home early and artificially control the price movement. The crypto market, on the other hand, is a free and open environment where the trading is global and always open. There are few rules here, so a ripple of a rumor can turn into a wave of fear, uncertainty, and doubt in mere moments. Today's negative numbers across the board were due largely in part to China. As we recently saw in September, China's position in the market holds a lot of weight. Now, China banning ICOs may have seemed like the end of crypto at the time, but viewing September's price action today, it hardly registers as a blip. Likewise, historically, we have seen a market correction around this time of the year, 3 weeks out from the Chinese New Year, for the past 4 years. While past events don't necessarily indicate future results, it has also been the case for the past 4 years that following a minor correction in January, the market has gone on to new highs, moving from Q1 to Q2. Furthermore, today's correction only returned us to the total market capitalization at the start of this year. Coming off the recent and mostly misguided scare of South Korea possibly banning exchanges, and the subsequent round 2 of that scare last week, the market is sensitive to any news which seems to indicate a direction towards cryptocurrency being outlawed instead of properly regulated. Just as in the case of South Korea, a single Chinese government minister has enough sway to clear billions from the market. Sourcing information from an internal memo from a government meeting, Reuters cites the People's Bank of China vice governor urging the government to enforce a complete ban on centralized trading. The memo from the meeting, held among internet regulators and other legislators last week, also has the minister suggesting local and national authorities target centralized cryptocurrency trading venues and the wider Bitcoin services industry. Individuals and institutions who provide settlement and clearing services, guarantees, and even centralized online wallet providers are also to see a ban, the minister reportedly added. Many of the mainstream news sources went around in circles citing one another in reporting this news, but none went on to clarify what the memo was actually targeting. Peer-to-peer trading is not banned in China, but matchmaking services are more similar to private exchanges. It's those matchmaking services that are now being targeted in China. It's about unlicensed trading, not about the blockchain or tokens. Unless you are a Chinese crypto whale, this news doesn't really affect you. This is exactly the same way we saw the South Korean ban play out. Any sovereign government has a vested interest in protecting their citizens from unlawful exchanges where fraudulent activity is unregulated. And basically, governments don't like black markets. Both China and South Korea want to shine a light on these fringe elements of this new economy growing within their borders. Those services and exchanges who operate under jurisdiction of the law, most if not all of the major ones, have no reason to fear punitive action. We'll continue to see fear cycles like this one as cryptocurrency is still vulnerable to government overreach. But as we noted in our Crypto College series, an outright ban of cryptocurrency is very unlikely at this stage. Furthermore, regulation is a harbinger to mainstream acceptance and institutional investment, which is necessary for continued development and prosperity. We anticipate this trend may continue in the short term. Read about this further in our fundamental and technical analysis sections below.
Hey folks, it's Doc for Ready Set Crypto. There's blood in the streets and crypto markets today, so there's a ton of stuff that I want to cover with you. There's so much that I want to tell you and give you advice on, but so little time to do it in. So I'll make some major points today and give you some things to think about regarding your own portfolios. And then I'll do some major coin analysis. The first thing I'd like to talk about is risk management. Because when I talk about risk during a bull run, no one wants to listen. Nobody thinks they need it. But now that I've got your ear, you're more likely to hear me out. I have 2 major rules regarding risk management that govern all of my trading. I want you to copy these, steal these, and apply them to your own trading, and I hope that they serve you as well as they have for me over the years. Yes, I was one of those traders that would get caught on the wrong side of price, and I lost sleep, and I was a nervous wreck. Maybe it's a rite of passage, but I didn't enjoy it. It wasn't profitable, and I wanted to change and improve. So I sought out others that had been down the same road before, and I learned from them, as I hope you're able to do from me. The first rule is what I call rule number 1 of risk management. It's quite simple. Never enter a position before first identifying your exits. Never enter a position before first identifying your exits. Why is this rule important? It's because of the fact that it's very difficult to determine what to do with a live position that you might have a lot riding on. If you identify your exits prior to entering, you now know exactly what to do and you don't have to stress out over it. You simply follow your own directions that you made before. But trying to figure out on the fly what to do with a live losing position is like watching the inside of an asylum. So rule number 2 is what I call the golden rule of risk management. It will also keep you safe during these times. Rule number 2 is never place more than 2% of your account at risk on any one trade. Notice that I didn't say you can only use 2% of your account per position. Rule number 2 is 2% of your account at risk per position. No one trade should stress you out to the point of losing sleep or worse. So that's it. For some of you, you've never heard those rules before and they might provide you some guidance. Okay, so part 2, now what I want to do is to show some of the techniques on the chart that we can use to evaluate what's going on with the price of some of our assets. So I'm going to be focusing on some of our tier 1 and tier 2 assets that most people are likely to be holding out there. Just about everything is red across the board. Folks are panicking. We've got Bitcoin down 14%. We've got Ethereum down 17, 18%. We've got Litecoin down 15%. And those are some of the better ones. We have NEO is down 23%. So what do? Just see these big red candles and panic and sell out, and hopefully we've caught the bottom, and you know, hopefully we've saved some of our capital that we can invest into the next bull run. Well, let's take a look at this. Let's see some techniques that we can use to objectively look at charts and make some decisions with them. Now, the first thing I want to point out is that if you end up chasing a market move like this, which is a just parabolic upswing like this is also called a FOMO move, which is fear of missing out. And these are some of the most difficult ones out there to avoid because you feel like you're getting left behind. You feel like the train has left the station. You're running down the track saying, hey, wait for me. Let me get in too. And these form the very worst entries, period. Every time I've entered one of these, it's been a regret later on, like, how could I allow myself to do that? So I do everything in my power not to do that. So I will look at things like the CHOP index with very, very low energy values down here, and I'll say, nope, not going to do it. So again, I talked about this last week. I said, your worst entries are the ones that feel the best to get into. Feels great to get into something like this because you're going along with the herd. Eventually, you will probably regret entering something like that. Okay, so that's all water behind the bridge, but I did need to make that point that please don't enter these when they're running away like this. Find a way to either enter on a pullback or on a breakout from a consolidation. Those are much, much better entry points. Never chase after a coin. Let's say you've got Bitcoin and you got in at a much, much lower price than this, and you're just trying to evaluate whether or not this thing is in the middle of just completely melting down, or whether this is just going to be another one of these 30 to 40% pullbacks like we've seen several times in just the last year alone. The tools I'm going to go over today involve fib retracements, so Fibonacci retracements, as well as trend lines, Bollinger Bands, and confluence of support. Are these the only way that you can evaluate a chart? No, these, of course not. There's several different ways to do it. What I'd like to show you is just some commonly available ways to do this that should be easily picked up by anybody out there, and so they can form their own objective opinion as far as what to do with an asset. So the first thing is, when I see a market going nuts to the upside like this is when I'll typically apply the fibs. Now, where do we start this from? This is a little bit subjective. Where I'm starting it from is what I consider to be the beginning of the latest swing up. And this one is going to be back here around mid-November. So this is the very beginning. This is my reference point, and I'm going to draw this fib, and I'll do this one on Bitcoin Cash in just a minute. So I'll do this one from scratch, and I'll show you how to do this. So I'm going to draw this from the bottom to the top, and then what you're going to see is the fib retracements on here. Here's 23.6%. Clearly, we have blown all the way through that one. Here's the next major one, which is 38.2%. So a very healthy market that's just pausing will often come down to the 38.2 and violently rebound from that fib. Now, 50% is not technically a fib. We're going to skip by that one. 61.8% definitely is, and it can be very important. This is the rule here. If the price goes up to 100% and then down and past the 61.8% retracement. So in other words, if it's already given up about 62% of that move and keeps on going, it's likely to fill in the triangle. It's likely to go all the way back down from where it came. Is that an absolute rule? Of course not. This is all subjective. This is all based on probabilities. Probabilities generally state that if a chart goes through the 61.8% fib, it's likely to keep on going. Now, there's a good chance that you'll be able to go find some charts where that rule doesn't come into play. All right, so what I would encourage you to do is to see how well that it worked on previous moves. So what you do is you go back in time on the chart, draw the fibs for earlier moves that pulled back really hard, and see how well that it obeyed the 61.8% rule on the fibs. The second thing I want to bring up here is trend lines. So match all of the important lows that are out there. The price should find support at that trend line. So we've got a pretty clear trend line matching all the lows of Bitcoin. Wouldn't this be a great buy point if it came all the way down here and tested this trend line area? Now, again, it's going to violate that 61.8% fib, but there's nothing that says that it can't do that within the space of a day. Just arc down here. You'll see a lot of these extreme waterfall declines in crypto that somehow bounce before the end of the day. So if you're going to look for something to pick up, this will be a great buy point. In a few minutes, I'll talk about how you can evaluate that buy point a little bit better. Now, another thing that I will look for when it comes to the choppiness index is I will look for a lack of energy to the downside. So if this move is so linear and comes down to a level which has got confluence with this trend line as well as a swing test down here, and it's also into exhaustion, that forms a pretty good high probability buy point. Or if you're already in the asset, perhaps that's a point where you're going to pick up something. So let's go to our next coin here, Ethereum. Totally different look, isn't it? Completely different look. So this one's much, much stronger. So I'm drawing the bottom of the swing from down here, and this one is in early December. So this to me is sort of the beginning of the latest run in Ethereum. You can see here that the 38.2% fib is showing support. So this one is much stronger, much healthier. We've got a very defined swing test right down here. It's just below the 50%, and it also comes in right around this point here where the trend line is going to intersect it. So to me, that would be a tremendous buy point to be able to pick up some more Ethereum, or if you're looking for a great value point, there it is right there. But as you can see, this one is much stronger, and it's just down to the 38.2% fib. Very, very common for stronger assets. Now let's look at Litecoin. Litecoin's going through the same thing as Bitcoin. It's coming down to that 61.8% fib. It's also coming down pretty close to the trend line here. Now, Litecoin does not chart as well as Bitcoin. Bitcoin is actually one of the best charting coins that I've seen before, where technical analysis really does work very well. Litecoin is really kind of sloppy. So I don't give as much weight to a coin where it doesn't bounce where it should bounce and it doesn't act where it should act, those kind of things, because it shows that not as many people are actually watching that to make the chart a self-fulfilling prophecy. Okay, so now let's go to Bitcoin Cash and let's show how to draw the fibs. So where would you say that this latest swing began? To me, it began down here, which is going to be late October is when Bitcoin Cash took off. So what I'm going to do is go over here to the left-hand toolbar and select this tool. I don't know what it's called, but it's where the pitchfork is and everything like that. And about halfway down is the fib retracement. So again, I'm on TradingView now. This is the TradingView tool, selecting the fib retracement. And I'm going to select right down here as the beginning of this, and all I have to do, I just clicked once, left click once, and I'm going to go all the way up to the top here. And I can even drag this along a little bit, and I'm going to intersect that very top tick that's up there. Okay? And we can see that Bitcoin Cash is also playing with a 61.8% fib. It's testing this level, but it's also found confluence at this trend line. This is a very important trend line coming up here. So actually Bitcoin Cash has got a better confluence point right here, right now. Okay, let's briefly go through some of the other ones here. I'm just going to look at NEO. NEO has obviously been very strong lately. It's coming down to its 38.2% fib. Nothing really wrong with this one, just to pull back. And here's Walton Coin. Walton Coin is actually going through and forming this cup, and it's showing the handle pattern here. Now, this was kind of a failed breakout that it ran against here. But it's building kind of a handle pattern here. So cup with handle, I would expect to see a consolidation here. You can also see that the choppiness index has also exhausted itself on the move to the upside. So it's building up energy. So I would expect this to see a little consolidation, sideways movement here. And perhaps we'll see the next leg up from here. Now, this isn't a very big target. Cup with handle, basically, from the breakout from here, the target is the vertical displacement from top to bottom. This is the neckline to the bottom of the cup. So even if it does break out here, we're not expecting a huge move from this, but this is a very strong pattern still. Okay, so the last thing I want to bring to your attention is, I talked about this a couple of days ago, that these symmetrical triangle patterns do build up a lot of energy, but lately what they've been doing, and we've seen this happen again and again lately on this, is we've seen them break to the downside first before they get that slingshot move to the upside. So this was the subject matter of my video the other day. All these patterns are kind of like building up consolidation, building up energy. They break lower first, and then they explode to the upside. So are we seeing the same thing again here? Well, I don't know, because I don't know the future, but what I can do is I can use different techniques to let me know when it's bottoming out. And here's where I can go to a smaller time frame. Now, I don't have time to get into this today, but one of the rules of price action movement that I teach is that reversals start from the inside out. So larger time frames dominate the trend, but reversals start from the inside out. Kind of like how you get sick from a virus. It happens from one virus that starts to multiply inside. You don't get sick all of a sudden. It happens from the inside out. So what we can do here is we can go down in time, maybe to something like a 5-minute chart or 15-minute chart, right? And what we'll start to see here is, before something like Bitcoin reverses, okay, a lot of these, we're starting to see this pattern of lower highs and lower lows and all that, and everything is getting very negative. Right? So what will happen to reverse this is we'll see at some point this pattern will reverse. We'll start to see this price action move into a series of higher highs and higher lows. And it will be almost imperceptible on the daily chart. But if you look down at a smaller time frame, you'll start to see the reversal patterns happening from the inside out. If you start to watch them moving into small patterns of higher highs and higher lows like this, this shows that change in polarity back up to the upside. Again, you won't see this on the daily chart. It's all happening kind of underneath the covers here, but you can start to see that reversal happening from the inside out. Okay, hopefully this all makes a lot of sense. I've gone into probably a little bit too much detail today, a little too early for many of you that maybe don't do any charting. But there's a lot of depth here. There's a lot of technique that you can always learn. Even if you're good at charting, there's always something more that you can learn. I just want to let you guys know some of the skills that we can bring to bear to help you with some of your crypto trading. Thanks for listening. We'll see you tomorrow.